All right, cool. My first time using OBS. Hey guys, just wanted to do a quick video about two plays today that, if you look at the charts down here, they look very similar, right? Pop in a pre-market. This is JNCE and PSTV, which is a ticker I talked about in my first video. Very similar action, by the way, for the same reasons. So they look similar, but I want to talk about these two charts because the fundamentals behind these companies are almost as different as you can be. They're both biotech companies, but we're going to dive into why. By the way, I shorted this. Huge win. Just with the fundamentals like PSTV we'll go over, but you see that trend reversal, you see a big stuff. Just when the fundamentals are this dirty and the dilution is this big, I mean, you size in on trend reversals, and if it reverses, you size in again. You keep tight risk because eventually, even if you lose 2 or 3 times, your one winner is going to more than make up for every time you lose. And then JNCE, this was actually a stock that I didn't notice until it was kind of in the low 8s. But when I looked through the fundamentals really fast, I realized I wouldn't even shorted it in the beginning anyways. So let's go over. So this is PSTV. Let's just look at the news really fast. Again, this was a big win, like 30% winner. And these are the best plays. So the news is orphan drug designation, which if you follow, I always recommend you write down all the news of all the plays, especially if you're going to be shorting microcaps. You have to know how to read biotech microcap news, okay? Because it's very easy for people to get tricked into thinking all these PRs are good news, right? I mean, PRs are made to sound good. Okay, that's no company's putting out a PR that's bad unless they fail like a phase 3 trial, so like something that they're forced to put out. But most of the time, they're going to make mediocre or meaningless news try to sound good. And then if you don't know how to read biotech news, you can easily fall in the trap of wow, this thing could run. I don't want to short pre-market because maybe it's going to keep going up type stuff. Let me pull up a bigger chart. Move the scanner. Get rid of the moving averages really fast. Just have VWAP up there. Yeah, so if you think it's good news and this thing's running on volume and you're scared to short in the pre-market because maybe you don't understand yet how to read biotech microcap news, you're going to miss out on some big winners. So first of all, you'll find just through tracking that orphan drug designation means nothing. It's a super common pump PR that it's super easy to get. It's not like getting FDA approval for some phase 3 drug that's going to change the world. That's not what it's for, okay? And actually, if you read here, it'll say that this orphan designation is for a drug that's currently in phase 1 trials, which, by the way, phase 1 trials means nothing. Any company could be in a phase 1 trial. Whenever you look at news, you always have to ask yourself, how hard is it for this company to put out this news? Was there a major barrier in place for the company to come out with these news? In phase 1, I mean, any biotech company can easily do a phase 1 trial, and it's super easy to release that news, okay? The barrier to releasing that news is very low. And it sounds good. Retail investors who don't know anything, especially ones who like to go long, don't know any better. They see the words FDA, they see the words trials, they see the words positive results and stuff like that, and they buy the stock. So keep track of biotech news, and you'll start to see patterns. You'll start to see that this means nothing. Phase 1 means nothing. Phase 2 also usually means nothing. Phase 3 is what you want to look out for. But usually if a company's in phase 3, their market cap's usually pretty big. They're going to have a starting market cap before the run-up of like 200, 300 million. And phase 3 companies also usually have high institutional ownership, have a lot of cash, and they usually don't fade like this. But phase 1, phase 2 companies and this type of stuff, pretty meaningless. So we like to see that. We really like to see that. So PSTV, I did a video on it before. The fundamentals are exactly the same. The main thing you need to know is its current assets is 10 million. Current liabilities is also about 10 million. So their net working capital is almost zero, which means they barely have enough money to cover their current liabilities. And then, as you see, the cash, their net loss and net cash used in operating activities is negative, so they're just burning money. They're not going to run out of money anytime super soon, but again, net working capital is almost zero. So actually, they could be running out of money, not right away, but they know they need money in the future, right? So another interesting about PSTV, people might remember from like a year ago or 8 months ago, whatever it was, they did a big ass offering that sent their stock going from 18 to like 3. And the reason that offering happened is because if you look at this, whenever I see a term loan obligation for a decent amount of money, you actually want to read about that in the 10Q, because sometimes when companies this bad get loans, the person who gives them the loan will often put restrictions on, for example, how much cash they need to maintain in their account, right? And that's actually what happened here. So we go to term loan. So you go to term loan obligations down here, and you'll actually see I already highlighted it, but essentially the company who gave them this loan that they still have $6 million left has a minimum liquidity covenant of $2 million, which pretty much means this company has to maintain $2 million in cash in their accounts at all times. So when you're calculating cash burn, don't just calculate it of how long is it going to take for them to go to zero. It's how long is it going to take them to go to 2 million, because they have this. Now, of course, they can amend this. They can go and talk with this person who give them this loan, and they can negotiate something new. Maybe a higher interest rate or something like that, or bigger payments or something. But overall, for the meantime, just a good thing to know. Like, again, I think they're at 9 million in cash, so they're not like on 2 million's door, but you're gonna put that in the back of your mind, right? And the offering from like 9 months ago came from the fact that they were almost at this $2 million mark, and their stock price was at like 18, because they pumped up their stock, because back then their float was like $1 million, and it got like super manipulated from like $2 to 18. I think it went to like $22, $24. I could look at the historical chart, but that's essentially what happened. And then they raised their MVPHS, and they did a big offering, and it crashed the stock. I think it was an intraday offering. And yeah, it just crashed it from like $18 to $3. And if you were short that, you would have made a ton of money. So anyways, that's good to know. Financially, they're just garbage. When net working capital is almost zero or negative, it's it's a huge sign that not only is this going to fade, but it's probably going to fade on the first day. So that's what I'm thinking. So then we're wondering, is there a dilution, right? And they don't have an ATM, but what they do have is warrants. And again, from the video, my first video I made, I talked about this, but there are warrant sections right here. And as you see, at the very bottom, it says, as of June 30th, so we have to keep that in mind, today's September 1st, they have 3.3 million warrants, and the price of these warrants is at $225. And just like in the SONN video I did, my video right before this that I made over the weekend, so that would have been my second video, I always say that if you ever see a company that amends their warrants, so warrant amendments in return reducing the strike price, which is the exercise price. So if a company ever amends warrants to lower the exercise price, it's as bearish as it could get. They know these warrants exist, but they're out of the money, and they want them in the money so the person holding the warrants exercises those warrants. And that way, when they exercise them, PSTV gets money, and the person who exercises them can dump the stock during the pre-market and at market open. And we saw that the last time this ran, which was actually, was it 8.7? Yeah, it was this. I'll just go to it really fast. Again, same type of action, pump And this was actually pumped, I think, on no news. 7 a.m. short. I went over this in my first video. And they exercised some of those warrants, but remember, they had 3.3 million. And this traded 3.3 million on the day, which doesn't mean all those warrants are gone. It's very, very difficult to drop, to sell 3.3 million shares worth of warrants, right? Maybe they got maybe 10% of this volume was from those warrants, so maybe they dumped 300,000. Like, it's really, really hard to dump that much. So if you see volume of 3.3 million, just maybe 10% of that was the warrants, right? You can't assume they must have dumped it all on this day and during these days, during these 600,000 share, 200,000 shares. No, it's really, really difficult to dump warrants because they're super dilutive and it's nonstop selling pressure. And if you crash the stock too fast, which is what happened here, look at this volume in the morning. These are 2-minute candles, not even getting over 200,000 shares per 2 minutes. Volume dies, and that means you can't really dump those. You're only able to dump a fraction of those warrants. So my thesis was a good amount of these warrants still existed, right? We won't know until their next 10Q, and sometimes they put out PRs. Actually, I want to show you that. If all of the warrants are exercised, a lot of times these companies will put out PRs because they see it as good news. Hey, look at all this cash we got. So SONN, the video I made last time, I talked about how my thesis on August 24th, was they're pumping up this price to dump the warrants. And look at this. 1 day later, we have exercised all of our warrants, which means my thesis was completely true. It was pumped. They got a ton. They had 83 million shares of volume. They dumped 3.3 million warrants all during that day, all during August 24th. SONN pumped the price, dumped all their warrants, right? Super manipulated, went over it in the video, and the PR next day just proved that I was exactly correct. And those trades could be so good. They're so good if you know how those warrants are exercised, where they dump, what type of actions in the pre-market, what type of actions at market open, what type of manipulations might happen in the afternoon, what's their goal, what are they thinking. And if you know all that information, you can just short in the pre-market, short at market open, short in that afternoon push that you know is just manipulated to dump more stock and dump more warrants. And you could get 20% winners, 20% winners, 30% winners. Very stress-free, just from knowing this information. What's interesting about this, by the way, SONN, after exercising those warrants, they got 2.3 million Series B warrants, which had an exercise price of 0 and were instantly exercisable, if that's the word. They could immediately exercise it, which is why, here, let me actually, after this run-up, it was actually, I didn't think about this because I didn't read the 8K that closely, but this continued to dump because as soon as they exercised the Series A warrants, they got these Series B warrants, which with a $0 exercise price, which means it was free money. And they continued to dump into the next day and into any of these little bits of volume. They dumped those Series B warrants, which actually made it a great swing trade. I just totally missed it. I sized out. Here's that manipulated push. Size in here after all the longs get trapped. Goes down. Size out at 3.8. But this went all the way down to 2.5. This actually would have been a great swing trade for that, but I just totally missed it. And then they got 11.3 million Series C warrants at the same exercise price of 3.19, which is what the Series A was at. But the thing is, they have they're not registered, so you have to wait for the shelf registration that specifically registers these warrants. Also, they have a 6-month lockup period. So if you see SONN run, you have to wait 6 months from this date. So in February 25th, 2021, they can use these warrants. But if it runs up again above 319, don't assume it's an automatic short. I mean, it probably still will be because this company's trash, but don't expect the warrants to come into play until after the 6-month lockup period. Anyways, so PSTV, like I said, it was very unlikely they exercised even a tenth of these warrants, maybe a fifth, but they still had a lot left. So it pops up on my radar. Shares were hard to get, but luckily I was early enough where I was able to get some. And again, you're just waiting for that weakness. You're waiting for that level 2 action. You're waiting for this again, the tape, a bunch of longs went, like, you start seeing huge size up here in the fours of going long, and it just got stuffed and rejected and then rejected again. And at this point, it's just like, when you see that stuffing action, when you see weakness, you could size in and then size in more. And if it's going your way, just know these huge dilution plays, you could size in on all these bounces. And by the way, look at these bounces. Breaks VWAP, pushes, breaks this bounce, no volume on this bounce. I mean, this bounce is destined to die. And you could just add. That's a great time to add. And then with these big in the money dilution plays, again with the exact same action that happened on this day. And also there's bags. I mean, there's not a whole lot of volume trade on this day, but there's bags. There's bags in this, so you have historical bag holders. Hey, here's that gigantic offering. And look at these pops just dying, just bags. People getting bagged here and here and here. The float's 4 million, but remember, as they exercise their warrants, the float is constantly growing. So it's becoming bigger, which of course is more, we usually like to see floats in like the 7 to 10 million range. That's great. Produces a lot of bags. But even in the 4, that's not bad. It's not bad, especially when the volume isn't really that high. The float wasn't really rotating that much. And with the dilution, like, when you think about dilution, you can think about it as like new bags being created out of new shares. So you might still have the bags from, 1 month ago, 2 months ago, but then you have new bags out of brand new shares that didn't exist until they dumped it. Like, so it's super bearish. Like, it's incredibly bearish. And again, and these weak bounces just get rejected, and there's just more and more. And anyone buying who isn't just covering is getting bagged and bagged and bagged. And yeah, like, usually with these big in the money dilution plays, your price target is where it came from. So it came from 2.4, went all the way back to 2.4. You see this on ATM plays. As long as the warrants are in the money, I believe these warrants were at 225. So they were in the money all the way to where it began at 240. If the exercise price was higher at like 2.8, the odds are they would stop exercising their warrants, and the only way to go below 2.8 is from bag holders selling. So it's like, but in this case, the exercise price was pretty low. It was all the way at 2.25, which I can't even get to. So that's great. In the money all the way down. So I do want to compare this to the other, what's that ticker called? JNCE. So this stock is a little different. I did not short this, and even if I saw the news right away, I wouldn't have wanted to short this, even though maybe it's a good short. Maybe I just don't have enough information on these types of plays, but it wasn't something I would have been comfortable with, even though it would have given me, especially if I called it early, a big 25% winner. But, you got to short the shorts that you're comfortable with, that you have the data on. I have data on companies like PSTV that I know are worthless, that I know are dilutive, but this is a little different. So the news on this stock is that Gilead Sciences, a gigantic pharmaceutical company, is giving them $85 million in upfront payment plus a $35 million equity investment to buy one of their drugs or whatever. So actual news, this company is actually getting $85 million. Okay, it's not PSTV putting out pump PRs about orphan drug designations and phase 1 trials and stuff like that. This is a gigantic pharmaceutical company giving them $85 million. So definitely not the same. And then we go to BAMSEC. And also, you can look at some basic stuff, like their market cap's at 250 million. That's as of right now, but again, a lot higher than PSTV's. Float pretty big. Big thing right here, institutional ownership. This is 75% of the entire OS is owned by institutions. Not something you like to see. Institutions like to accumulate. They like to buy on dips. They don't like their stock crashing 100% of its gain like PSTV. Right? However, what JNCE had, should go to this 424, which is, you notice this was really the only 424 from the past 3 years. So it's only, usually I only go back about 3 years. I could have checked this one, but usually I like to see if there's any 424s recently. And they have a $50 million ATM with Cohen, which is super bearish. Like, Cohen is a known shit, investment bank. And they have huge ATMs that they like to tap into. So, okay, 50 million ATM. So now I'm forming my bearish thesis and my bullish thesis. You always want to form both, right? Even on a place like PSTV, you have to form some type of bullish thesis, which for me would have been something like chat room longs decide this is the hot stock of the day and they don't know how to read news, or they don't care about news, or maybe somebody's going to come and manipulate the float. It's only 4 million shares. We saw that with MTP a couple weeks ago in my first video. Somebody could come accumulate a bunch of shares at market open and send the stock price up 100%, 200%. So that's my bearish thesis. Possible manipulators or chat room sheep who have, they don't have a lot of buying power, but combined they do. Individually they don't, but combined they do, and they can move some stocks along with the manipulators. So that would have been my bullish thesis on PSTV. But on JNCE, my bullish thesis is actual good news. They're getting money, a lot of money, from a major pharmaceutical company. There's a lot of institutions in this thing. Okay. Also, a part of my bullish thesis for JNCE, look at their balance sheet, have $75 million in cash, right? Talking about net working capital wise, 16 million in current liabilities, 131 million in current assets. Okay, they're not running out of money. And plus, they just got 85 million more. So they have 75 million as of this date. Just got another 85 million. Not exactly hurt for cash, right? So, and then they have no dilution outside of that ATM. So, bullish thesis, they're not like PSTV. Like, I like PSTV because it's an easy short, right? Awful fundamentals, huge dilution, trash news, bag holders, weak volume. Like, it's like those are the plays you want, man. Those are ideal shorts. And this is actual company who actually has drugs that work, who makes money, who gets like loans from actual banks and not like super shady people, even though they do work with Cohen, but whatever. They have plenty of assets, right? But they do have that ATM. But it's like, okay, I love ATMs. They're the best type of dilution because ATMs, what's great about an ATM, it's zero risk for Cohen. Only thing Cohen has to do is sell the stock and they make commission, right? It's unlike warrants where if you have 3 million warrants, you have to exercise those warrants, which means unless there's a cashless exercise, it means you have to pay for them. So you're paying money out of pocket to exercise them, and you have to sell those shares. So warrants carry some risk, right? In terms of, can we get the volume above the exercise price to sell these warrants into? But an ATM, they could just dump as many shares at any time they want from time to time. They don't have to convert all 50 million this into shares and sell. They just do a little bit at a time, And I believe in the 10Q, it says that as of, again, the 30th of June, they only use 5 million of the 50 million. And of course, you always have to calculate the MVPHS. If the MVPHS, the market value of publicly held shares, if you don't know that much about it, in my last video I went over it. It's essentially the float of this company, which is like 16 million shares, times the highest closing price of the past 60 days. If that's below 75 million, then they're restricted in how much of this ATM they can use. Right, you have to take whatever that MVPHS is and divide it by 3, and that's how much they can use in a 12-month period. And as you see, they already used 5 million. The thing is, their MVPHS is well over 75 million. Because like I said, their float is like 16. Their highest closing price is like 7, right? So it's over 75 million, and it's good to go until their next 10K where it gets recalculated. But for the rest of the year, until their next 10K is filed, which is until February next year, they can dump as much of this ATM as they want. They have probably at least 40 to 45 million left on it, because you got to think this ATM, this 5.2 million used is from the 30th of June. So you have to kind of like open up the chart in the 30th of June was from back here to here, and you have to look at the volume and think how much of this ATM did they dump between here and here, which is today's date. And you see no volume, so probably zero, right? Probably none of it. So we go back here. It pushes up on this, Gilead Sciences giving them $85 million in cash. So I have my bearish thesis, which is they have this ATM that maybe they want to use, but then I'm thinking, well, do they want to use it? Because they just got $85 million and they already had $75 million, so they have a lot of money. But at the other time, there is a bearish component to this, because with biotech companies, if you actually read what this company does, like what their main drugs are, which is, again, kind of a crucial component of understanding biotechs if you're going to be playing biotechs, because biotechs tend to go up on these crazy news events and you might want to short, and it's good to know how these companies operate. You'll see here in their overview section, they'll talk about like their operations. They'll talk about what drugs they have, how far along they are. And you'll see here that it's like they have this drug, this cancer drug, this T-cell therapy, right? And they're currently in phase 2 trials. And what you need to know about companies that are in phase 2 and possibly looking to go to phase 3, and judging by this company, it seems like their phase 2 results are actually pretty good if they have Gilead Science investing in them. Phase 2 and especially phase 3 trials are super expensive, and they take a long time, and you need a lot of money to do it. I think you could actually, how much does phase 2, phase 3 trials cost? Yeah, so it says here, just, I don't know how old this is. From 4 years ago. And this is one source, so you want to like kind of cross reference it with other sources. But essentially, phase 1 could cost up to 20 million, this range. Phase 3 could cost 11 to 52 million. And sometimes they might have to do, I don't know if they have to do multiple trials. And that doesn't take into effect like other costs of running this company and other drugs they have and stuff like that. But the point is, if this company's looking to go into phase 3, they're going to need a lot of money. So even though they have 75 million and they just got another 85 million, they might just tell Cohen, like, hey, like, our stock doesn't have a lot of volume, right? Usually we can't tap into that ATM because there's no volume to tap into it. The stock price will crash, right? This is a big news event. Tap into that ATM. We're not going to get this. We're normally not going to get this level of volume. And hey, the more we could tap into that ATM, the better. And it's pretty much just free money for the company. And they know they're going to have huge bills from phase 3 trials in the future if they're going to go that route, which they probably are. Tap it. So you got this bullish thesis and this bearish thesis. And the thing about me, the reason I didn't want to short this, like I said, I was a little too late. I didn't notice this until it was like all the way down here. But even if I noticed it right away and I was doing my research and I found the ATM, and by like this point, I put all the pieces together, I could do this stuff pretty fast just because I've been doing it for a while. But these are the places where it's just like you're just like going through the I'm going through the news in 424, so I'm like look at the cash flow statements, doing a bunch of math in my head, trying to think of what they're going to do. But even then, I probably wouldn't have taken it, only because like the ATM plays I like to short come from people like PSTV, right? And these companies that actually do something, they actually have a business where they actually make money, working with actual legitimate people. Like, I'm not comfortable, man, even though like I just explained my bearish thesis to you, that this could fall. They could tap into it just from getting the liquidity from the PR, and that's, to my opinion, that looks like what happened, unless also maybe some institutions were dumping, even though this is really good news, so maybe they'd be looking to accumulate. That's another part of my bearish thesis. Like, oh, maybe institutions will start buying dips and pushing it back up. And you know what I mean? Like, it was one of those things where I kind of like knowing for sure, right? Just because something's ATM and they can use all of it is like, I don't like just shorting into that when it's not my niche. My niche is trash companies like SONN and PSTV. It's not, legitimate, $250 million market cap biotech companies. So anyways, it would have been a big winner, and maybe in the future, I'll get some more data on these type of companies with this type of market cap size, with this type of news, with this type of ATM, with these type of financiers. I know a lot about Cohen, but not from companies that are usually this big. Maybe I'll be able to put more pieces of the puzzle together and take it. Maybe not a huge, ATM plays on like on plays like UONE, like I did in my last video, just like max BP type plays, but like maybe not max BP, but maybe just like a normal trade. And if I think ATM goes your way, and I know enough information about it, maybe a nice 20-30% winner on a normal size. So anyways, I just want to go over those two, kind of compare two biotech companies, one that's known hot garbage, PSTV, and one that's not as much. And there's some other things to consider when going through it. So hope that helped. There's some other plays. Kodak went up on really hilarious news. I'm not essentially, a hedge fund said they were accumulating shares, but I think what happened was they're actually looking to dump. But since they were over 5%, they had the report that they had 5% shares, because maybe they accumulated a little bit too much, and they were definitely looking to dump. I don't exactly know all the details, but essentially it was the perfect type of news to lure in like Robinhood longs who don't know anything. They see hedge fund buying Kodak, they think the smart money's coming in. They don't realize that smart money is getting out, and they pump the stock price, and it falls right away. And it was pretty awesome. It was pretty awesome to see. It's pretty awesome to see like longs who mistake really awful news for good news. I mean, it happens in the microcap space all the time, but when it's a company at Kodak's size with Kodak's history of the past couple months, it's even funnier. So anyways, that's the video. Hope you learned something. I might do some daily videos if I find some interesting stuff in the future. I just want to do a quick one on these two. All right, see ya.